Well, Wall Street soared today as the Dow Jones, NASDAQ, and S&P all made massive gains. The Dow went up 1,086 points, gaining 5%. The NASDAQ both made 5% and 5.8% gains, respectively. That was the biggest percentage gain for all three since March of 2009. So for more analysis on this, we'll be joined now by Danielle Shay. Danielle, thanks for being with us today. So we've heard about...
Thank you for having me.
So we've all heard about the movie Miracle on 34th Street, right? But the real Christmas miracle was on Wall Street now as stocks rallied to hit 10-year percentage highs. The Dow soared over 1,000 points to its biggest ever single-day gain. Walk us through this dizzying spike.
The rally today was absolutely amazing. But the thing is, for me, we had to have a rally because the market was so oversold. The market has careened lower for months, especially the past 2 weeks. The losses that we saw in the past 2 weeks, those were equivalent to the losses that we saw over a course of a 5-week period throughout October and November. So the way that the market functions, I mean, it really just cannot go straight up or straight down. So due to the fact that it went straight down really last week, I was looking for an oversold bounce. And I think that today what we got was a combination of two things. Number one, the market was incredibly oversold, and at that point it needed to bounce back. It needed to revert to the mean. And the second thing was that traders were looking for a Santa rally. And when you have so many traders thinking, oh my gosh, after Christmas the market's going to rally, I think this is a good time to buy, and everybody comes in and buys at the same time, we had just a phenomenal oversold bounce, a phenomenal Santa rally today.
Santa rally, I like that. Now, is this a signal, though, of maybe consumer confidence in the market going into the new year? And how much do you think this gain is attributable to the recent moves out of the White House?
Well, you know, there's a lot of things at play here. Yes, we had some good numbers in retail, Amazon, and yes, we've been talking about positive consumer confidence, and I do think that that was a little bit of a factor. But overall, I would absolutely say that it was helped by the fact that we did not have any negative tweets or negative news coming out of the White House today for once. But really, I mean, for me, it comes back to the fact that I do consider us in an overall downtrend, and I do consider us to be in a bear market. And rallies within bear markets can be incredibly sharp like this, and it really is a signal. It's a signal of a bear market.
Would you say it's a real spike that people can count on, or do you think this is just kind of, like you said, it's something attributable to the Santa rally?
So it's going to depend what I look for in the trading room and when I'm trading this. I mean, for me, I'm primarily a shorter term trader, and I love to trade rallies like this. But it all depends on the follow through. So today was amazing. It's going to be all over the news. Traders are going to be incredibly happy. But what matters is if it follows through or not. So as of right now, it's a 1-day spike. But if we can get a continued follow through for the next week, and if we can continue to pare back all of the losses that we've made in the S&Ps, Dow, NASDAQ, then it could potentially be something that can shift the overall trend. But we just don't know that yet.
Okay. Well, the government, as we all know, is partially shut down. The Dow didn't care, obviously. We saw the energy sector rise 6%, helped by a crude rebound. What else do you think is driving this surge?
So for me, what I've been looking for is exactly that. I've been looking for a rebound in crude and the energy sector. I've also been looking for a rebound in the industrial sector and the industrials. So these are really the sectors that once they start to shift, they can let us know they really precede a shift in the market. So today, that's exactly what we saw. We saw those sectors shifting higher, which tells me that this bounce could be sustainable for at least a couple days. And if we get continuation, possibly even more, but I think it's going to go back to the next earnings season that we have upcoming, and that's really when we're going to know.
Okay, and what about this? The rumors of future interest rate hikes or a potential shakeup at the Fed, are they rattling nerves heading into the new year?
I do think that they're rattling nerves heading into the new year, and I do think that people have to be concerned about that because we're in an economy where we have a huge amount of consumer debt, margin debt, that's student loans, that's credit card debt. And when interest rates are rising and when people have variable rates on any of those debts, it can significantly impact your finances. So number one, consumers need to be aware of that. But number two, yes, I do think it is rattling the markets. And ideally, the Fed will slow down course if the markets continue to decline.
And real briefly, before we get into the new year, what are your predictions?
So what I'm looking for is a sustained Santa rally for at least the next 2 to 3 days, if and only if we can break through significant areas of resistance in the S&Ps. Primarily, I'm looking for the 2,700 target and the 2,800 target in the S&Ps. I mean, that would be phenomenal, but you have to remember it's hundreds of points higher. If we can break through those price targets going into the next earnings season, then we can see a shift in trend. But if we cannot break through those areas, then I'm looking to trade this bear market for at least the next few months.
All right. Thank you so much for joining us tonight, Danielle Shay of Simpler Trading.
Thank you so much.
Hey YouTube, thanks for checking out our channel. We hope you enjoyed the video. We have tons of content for you just like this. For more of RT America's one-of-a-kind news and analysis, be sure to subscribe and never stop questioning more.